you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is on your shoulders, and you feel like falling over. Just let me in your head so I can be there for you, there for you. The night is young, won't you sing for me? Won't you sing for me? Till we fall asleep. The night is young.
Hello, everybody. Welcome to VC Masters, only on the Pod TV network, where we talk everything about venture capital. And of course, the latest information is the IPO of SpaceX, which finally crashed. And your friend, I guess, what's his name? Elon Musk is no longer a trillionaire, which we easily predicted that this was going to happen. Gone up, and then the spaceship goes down. Where it goes from here and where venture capital goes from here, we don't know. But who has some insight is none other than the star of the show, Dr. Salman Azar, who is a head of the Azimuth Opportunity Fund, but also teaches at Duke University. So maybe he can give us some insights of what's going on in this IPO and VC market. But as predicted, there was no soft landing right now. It looks like SpaceX went down below their offering price. So the people that, I look at the people that bought it at 200 probably wish they didn't. And the people that bought at 166 probably wish they bailed out at 200. But it's like any other IPO. They're very excited. Oh, look, it went up. And then all of a sudden, poof, it crashed. So now he's no longer a trillionaire. So what are your thoughts, Dr. Azar? Are we still open? Is the IPO market still open today?
Well, as you can see, I'm not wearing a shirt today. I had to give it to a lot of people who lost their shirt with SpaceX. And in fact, I have so many shirts that I need to give away to people who lost their shirt. And it has been really the start of where SpaceX is going to land. And there's so many puns that I can make with SpaceX, incidentally. But it's going to land at so many different, this is just going to be the start. And I don't think it's going to be pretty. As I'd mentioned in the previous show that, this is a massively overinflated price. If you just think about it logically, SpaceX was worth more than Amazon. Now, I don't care, what kind of business they are developing. It is not worth more than Amazon. And if you're buying their shares at $200 a piece, that means that you are valuing SpaceX more than Amazon. Almost everybody on this show is an Amazon customer. Hardly anybody is a SpaceX customer. Now, I know like people who are traveling, who live in remote areas, Starlink is the biggest value that SpaceX has right now. And in order for SpaceX to be the value of Amazon, they have to be like, probably 100 times more satellites up there. And I don't think that's happening in my lifetime, at least. And maybe not in anyone's lifetime. So this is the start of the end. I'm just surprised that it took so long. It is going to get worse and worse. And things in December are going to really hit the fan. And I'll probably have to buy more shirts from Costco in bulk to give to all my friends who didn't listen to me and bought SpaceX pre-IPO, bought SpaceX at $200. By the way, if you buy pre-IPO, there usually is a lockup period. You can't sell it until December or sometime like that. Now, some of the insiders at SpaceX can sell it sooner, but that's kind of unusual. But that's the story.
Yeah, I think you're right that the real problem is the metrics, that when they say that SpaceX is more valuable than Amazon, it just isn't happening. And Graham's book, The Intelligent Investor, would say, no, this isn't it. However, with that in mind, the people that made the play by buying the stock, because this is where the enthusiasm, what they call it, momentum goes, similar to AMC, which wasn't so many years ago. And in other words, it's all emotionally driven. So you can see that you would think the stock market would not be emotionally driven, but it was, because the metrics definitely weren't there. But for the first couple of days, you could have invested, and my plan is to do that with Anthropic and OpenAI. I believe they're both going to have momentum, but I said the reason I don't do this too often is you've got to get out quickly. In other words, if you don't sell, you don't make your profits and get out very quickly, then what happens is you're going to take the ride down. Or even worse, you buy on the up. Okay, and this is where they lost their shirts, because I looked at it around $200 a share. There's probably some of our listeners who bought in at 200. Now they lost their shirts on this. And they, as we used to say, the short-term investor now becomes a long-term investor to try to get their money back, which will be maybe longer than they think, because he's got 3 different companies. One of them looks like it works. The other 2 are not so sure of. I mean, seriously, AI is very competitive space. Not sure about that. Shooting missiles in the sky. They said he has to do like 100,000 to start making money. And that may be for a long time. And the only one that looks like it will work is the Starlink, which there are some customers and it has some basis to it. So for a long-term investor, I'm not there either. I'm not there long-term. I'm not there short-term. It's like what gets me, Dr. Azar, is the vast amount of money that was put into it. You're talking $75 billion, $85 billion. In other words, people who invest should be smarter than that, but apparently not. So, what's going on here? What happened to the intelligent investor? Does no one read these books anymore?
Well, I mean, people may read these books, but let's face it. I mean, most investors are not intelligent. Most registered investment advisors are not intelligent. They are good salespeople. In fact, I was just talking to you a little bit earlier that most investment advisors are good salespeople. The best investment advisors are best salespeople. They're not investment advisors. They have a playbook that they use to kind of rope you in, take a certain percentage of your assets, or not assets actually, so a certain base of commission, and so on and so forth on your thing, and it's just a game. And when you look at retail investors, that there is like a old saying that goes like, the market can stay crazy longer than you can stay solvent. And the short-term investors that have become long-term investors, you guys, I was listening to this NPR show the other day called, the bet on everything market. So as you know that, people are like betting on outcomes and this and that, and there are all these prediction markets going on. And the simple math there is that an average bettor loses money. On the average, the house always wins. Right? That's the only person that wins. And if you take the house part out and you basically randomize everything, because unless you go to the future and come back, you don't have that ability to pick the right side. And everything is kind of like accounted for in the risk that these platforms have. And this guy was saying that this sports betting on everything is a great way for people who don't have money to buy stocks. And I'm like, some people who are buying stocks are actually buying, like they are betting on things. And you have to be a little bit better in order to make money. And you don't have to be much better. You just have to be right more than 50% of the time. But just this, shooting darts like, a demented monkey, it doesn't work in the investing. You can get lucky. And most people that are, stay in investment industry for decades have learned how to manage their risk and still make money. And then there are these people who come in, they either lose money on their first attempt and go away, never come back, or they gain money a couple of times, start betting more and more, and they lose money. And no matter how it ends, what path they follow, it always ends with them losing money, because that's what the market is about.
Yeah, and IPO investing is an art in of itself. We showed the parabola effect, I guess you could call it, and this is kind of well documented in financial services, that at 135 jumps to 200, down to 180. That was like last week. Now it's below 150. There was one investment advising house that said the fair market value was like 153 a share. I don't know how they came up with that number, because I don't believe that either. Right now,
Yeah.
I think it's way, way lower than people have any anticipation of. So, in terms of SpaceX, definitely not as valuable as Amazon. People have lost their shirts on it, no question about it. And the thing is, it could even go down further. There's no floor on that stock. In other words, you could see it even tumbling further and further. And they just bought like I said, they used a lot of their capital. I don't know how they did the transaction exactly, but I'm pretty sure it was a stock exchange to buy another AI company, but they bought it for $60 billion. Well, now the question is this: did the people who sell it really get 60 billion? Because they bought shares currently valued at 60 billion when it was 200 a share, and they may have been a stock exchange with no lower limit on it. Now all of a sudden that $30 billion sale could be, the $60 billion sale could only be 30 billion. In other words, they may be taking the ride down also. You see what I mean, doctors are, we don't know the internal nature of that transaction, but it took place very quickly after the IPO. So whether it'll be disclosed in financial statements on a going forward basis, I don't know. But it was Elon Musk's idea to enhance his strategy of acquiring more AI companies. However, on AI companies and AI in general, it's, for most people who invested, it's non-profitable. In other words, a lot of companies, it's like, I don't know if you know your friend Mark Zuckerberg. He put a lot of money into Meta, which he was going to think everybody's going to wear these Google lenses and everything is going to be different. And he lost his shirt on the metaverse, just lost his shirt, billions and billions of dollars. Now he had billions to play with, but he lost his shirt. What seems to be making money though is Apple. Okay, I mean, Apple and Amazon, the two A's. I mean, they're here in Spain, they're everywhere. And Amazon is everywhere. In other words, they're here in Spain. This morning, they delivered us a bunch of stuff. Then this afternoon, I went down to the Apple store and bought, I forgot, one of their tablets. Then I see they're moving into mainframe computers. And so they're controlling not just the hardware, but the software aspects of this. And then they're linking it to their cell phones, which is important, because as I'm trying to take photographs and bring them into my Dell computer, it's like rejected. You got to use your Apple computer. So, Apple and Amazon, they have strong business models, strong cash flow, but what does Tesla have? He has an EV. I don't want to beat up Tesla too bad, or Elon Musk. He's got an EV that if the Chinese ever came into the US market, according to our data, his EV would just sink because the Chinese have already developed better cars than he has, except they're not allowed in the United States right now. I think due to public policy, they're keeping them out for right now. Then what else? He's got Starlink, and Starlink could be a winner for him. And then he's got a couple of losers. And what he has is a lot of faithful advocates on Wall Street. So he's got a lot of people that believe in him. But if you look at this guy, was he the founder of Tesla? No, it was the two Marks that found it. He didn't find that. Was he involved in PayPal? Yes, but he was involved with someone else. And somebody asked, well, he never developed anything. That's not true. He did develop something. He developed a basic program when he was a kid, and he sold it for $500. So please don't discount his skills. He actually developed a little computer program when he was a kid. But everything else has been acquisitions. He didn't discover he didn't develop Starlink. He didn't develop Tesla. He didn't develop PayPal. They were all developed by other people. Now, what he did do is he came in with money and he bet heavily. At one time, he was basically broke, and he had to borrow money to keep it alive. And he lives very frugally. I mean, he lives in flop houses. So the guy is definitely a character, but please don't overestimate his abilities in this area. And he's obviously he's a great salesman, a great marketer. There's no question about it. And there's a lot to be said by sales. I'm working with a company right now, and I said, you got to read Peter Thiel's book. Peter Thiel, in one of his chapters, he says one problem with tech people, they're really, really good at tech. They're really, really bad at marketing. Seriously. They don't know how to market. They don't know how to sell. And the sad part, conversely, the salesmen are really, really good at sales, but they have no clue how things work. So, it's just, it just is what it is. And hopefully our listeners will understand this, but, we saw that one coming. And if you're an individual investor, you should research IPO investing before you jump into that. So, anyway, what are your thoughts?
So on a serious note, I want to add another A to your A companies. I think Alphabet also should belong there. It is very pervasive. But on a more kind of interesting note, considering the SpaceX is valued more than Amazon, I'm surprised that you're actually ordering things on Amazon and having them delivered to your house in Amazon trucks. I would have imagined that with all the hype around SpaceX, you'll have a spaceship landing and delivering your goods, your bananas and your groceries and all that stuff. You just have like trucks showing up. That's interesting. On IPO investings, look, there are people that are very good at brain surgery. And they think just because they are good at brain surgery, they can be good at IPO investing. I am very good at IPO investing. It's like me thinking I could be good at brain surgery. And, maybe I'm exaggerating to make a point. Maybe brain surgery is harder. But, this is not something you just can just do. As I mentioned before, people who are amateur investors have a limited lifetime of investing. Either they are one and done, which is the best thing that can happen to amateur investors, or they get overconfident with a few successes and they bet more and more until they lose their shit. So don't do this like just going to AI or going to web and trying to kind of like research IPO investing. Have someone who knows what they're doing mentor you or be with you. I didn't learn about investing by investing. I learned about investing by co-investing with investors that were better than me, who knew more, who had more inside knowledge, legal inside knowledge. That's basically how you get into this. You don't get into this by saying, okay, I'm going to go, start Claude or something like that, and I'm going to start learning. You can obviously do that, but the problem is that you can go down a rabbit hole that you may never come out of. So please do this with somebody who knows what they're doing. And by the way, not a salesy advisor or investment advisor. That's not basically what you're looking for.
Yeah, and a lot of the investment advisors, what you said is true. They're salesmen more so than investment advisors. And they're technical. The ones I've seen that are really good are people that you don't meet, and they're very good at investing. But the thing is, they're behind the scenes for the most part, and they don't. As one person said, we don't meet with clients, but they're really good at what they do in terms of investing.
Those are the best. I mean, the best ones are the ones that you don't talk to ever.
Correct. In other words, and that's something that people don't know. A lot of the ones that are really good at investing are people that you don't talk to, and they're very much behind the scenes. And it's hard to like on IPO investing. It's something that you can't really train somebody to do because it's too much guesswork. You can study it and you can see there's a parabola effect. But the thing is, once you get in and you try to do it yourself, you don't know when that parabola effect hits you, and so it's pretty difficult, and it can hit you going out of the box. In other words, you invest $1, and the parabola always starts going down. So this is not an easy thing to do. And once it goes up, you have to make a decision. When do you pull out? Okay,
Yeah.
you better be close to we used to call it the Quotron boards. They don't have those anymore. But 40 some years ago, you had these boards, and you had to hit the button sell real quick, because if you don't, you lose your tail. I mean, it is not that easy. So I don't know. I think people don't understand that a lot of this is not that easy. And a lot of the investment advisors are doing what you're saying. They're looking to collect assets under management fees. That's it.
Exactly. The way they make money is a percentage of what their assets and under management is. In fact, private equity firms do this thing as well. And we run into those kinds of things. And we just, as a VC firm, we are a relatively small VC firm. And our main income is through carry. And carry is basically commission on how much money we make for the clients or our investors, not on how much money we take from them. So always be careful of people who are making money based on how much they take from you. Just think about it. The equation doesn't sound good if I am paying people money to take money from me. That fundamentally is a problematic situation. But as you were talking, I was reminded that of a lot that I used to run into Jerry Rice all the time at a country club when I was in Silicon Valley. And I learned a lot about football from him, American football for, the international audience, because there's another football that is happening somewhere like in North America these days. They're like using their feet for football. I mean, imagine that. We Americans we occasionally use our feet for football, but usually we use our hands for football, which makes sense, right? Well, it doesn't make sense, but so anyway, I learned a lot from Jerry Rice about football, but then the question is, did I learn enough to start playing in NFL? And the answer is simply no, and perhaps never, because I don't have the talent, the physical talent, the mental toughness that he has on a football field. And he actually owes a lot to Joe Montana. According to Jerry Rice, Joe Montana is hugely responsible for the mental toughness of Jerry Rice, because playing with Montana actually made him tougher. But, if you are, I was talking to some, developer who was saying, hey, I want to do IPO investing on my own. I don't want to really go through a VC or something like that. And I was trying to tell him you can't do that, because first of all, you don't, it's like me applying for your job. First of all, I should not apply for your job because I'm not qualified. But if I apply for your job, well, maybe, they will give me a phone interview and I would be rejected. And if maybe they invite me over for a real interview and I'll be rejected, but maybe they'll, make a mistake and make me an offer. And maybe I'll make a mistake and accept that offer. And probably a week later, I would be fired. And that's exactly what people experience when they get into IPOs. And that's how I experienced IPOs. I mean, a pre-IPO market or private investment market, I retired in 2007 because I didn't think I was any good at it. And I was just tired of being an entrepreneur and putting all my eggs in one company's basket. But, one of my mentors said, why don't you join me in my firm? Why don't you join me as an advisor? And I said, I have nothing to advise you. And he said, well, we'll give you that title so that, we can benefit from what your expertise is, because you have some expertise. And the reason you're not making money in VC investment is because you're not doing it right. And with us, you will see how it is done. And that's basically what it is, more of an apprenticeship model. And it's the same thing with, for medical doctors. They don't learn most of their trade in the medical school. They just learn the fundamentals. It's actually being going through the residency and fellowships where that's when they learn, and live real patients where they make decisions whether people live or die. Fortunately, we just make decisions of whether companies live or die, which is a lot easier because it's easy to restart a company. It's very hard to restart a person. And that's the way for you to invest in pre-IPO companies. Only way. And make money. Well, the other ways also, but, good luck to you.
Yeah, I think it's extremely difficult to impossible to do that because of it's the nature of the beast of IPOs and the nature of the beast of the venture capital market. So the people that are in it need to, if you're going to invest, you need to work with somebody who is in that market space, but don't try to do it on your own. And it's the same thing with IPO investing. There's certain things that you can't do on your own. Now, what you can do on your own, which is pretty simple, if you just want to put a bunch of money in the S&P 500 index funds, you can do that. But you're never going to get those large returns on the S&P 500 index funds. It just isn't going to happen. And it's just like in pension. We do a lot of pension annuities. We just tell our clients, you're not going to make a lot of money on this. It's like investing in a CD. However, it does release your other money to go ahead and invest elsewhere because you've already secured your downside. Now you can use more for your upside. In other words, have more money to play with. But I just don't see the individual investor being very successful ever in IPO or VC market space. It's too specialized. So what are your thoughts?
Yeah. So no, absolutely. And I think that's great advice that if you want to invest on your own, the only way for you to invest is to invest in some kind of an index fund. And that can be, my preference would be stock because they give you better returns over a longer period of time. But if you're investing for, you should not be investing for a year. You should, if you're investing in, for a year, you might as well keep the money in cash because it's not worth the trouble to kind of go through it and, just barely beat inflation. But invest in an index fund, sit back, sleep easy at night. You don't have to worry about constantly trading. And I mean, imagine like all this evolution of human being and you have become day traders out of that and playing this thing like a game. And it's no worse than like an addiction to League of Legends or something like that, where that's all you do. And it's a disrespect to all the evolution human beings have gone through. And I don't want to start kind of like a controversy on evolution versus creation here because that's not the scope of this. But just imagine like, all you're doing is kind of like, clicking the button. And that's all you're doing. That's not investing. That's playing games.
Yeah. Another important concept is time in the market as opposed to market timing. When you talk to people who are investing in VCs, do they look at horizons like 5 years to hold the funds? Because in real estate, when we look at people who are investing in real estate, I said, look, you buy now, but you're going to have to hold for about 5 years before you really see a lot of growth. Do you see that the same thing in the VC markets? Because the stock market is every day. In other words, up, down, 2%, 5%, et cetera. But VC and long-term investing, the holding period, you're looking at, I look at 5 years. What are your thoughts about that? It's time in the market as opposed to market timing.
Well, that's a whole show that you're talking about in the VC industry because we are going through an interesting change. Pre-COVID, our time horizon used to be 10 to 12 years. Every fund was written so that it would die in 12 years, which means that at the end of the 12 years, either it has to look for a continuation vehicle or it has to sell its assets. It's very much like a dying person who either sells their asset and gives cash to their inheritors, or they basically, look for continuation and give the assets away. But that has changed for a number of reasons. One is that the exits are taking longer. The other is that a lot of good companies are dying at the Series A level. So these are not bad companies. These are companies that should make it, but there's not enough money to get them to the next stage after they have proven their market. But that's a whole other show.
Yeah, and we'll have time on the next show to go on that because we're out of time now. But we do want to thank our viewers in the United States and across around the world, and make sure that you stay safe when it comes to investing. And we'll see you next week on VC Masters on the Pod TV network and on Roku, which is now being taken over by Fox. So it's going to be very interesting because it looks like we're moving to Fox. We just don't know when. But we will see you next time on VC Masters. Bye-bye.
I go anywhere with you. you, 'cause you fill my mind, oh, you fill my mind. We could build a dream, start up something new, and the world is on your shoulders and you feel like falling over. Just let me in your head.